Hello everyone, my name is Meizhen Chen. I'm from the University of Texas at Dallas. I'm here to make the presentation under the title Economic Characteristics and Market Value of Informal Finance in Rural China. Evidence from a Household Survey. So, this presentation consists of 5 parts. First, let me introduce some research background. In rural China, agricultural production and household livelihood are closely intertwined. Private financing activities in rural areas are heterogeneous in form, encompassing arrangements with long-standing historical roots, as well as more recent innovations. However, owing to China's dual urban-rural economic structure and constraints within the formal financial system, the market-oriented functions of rural private financing have not been fully realized. A systematic examination of the constraints faced by rural financing, together with an analysis of the market characteristics of rural private financing, is essential for assessing its economic role and development potential. This study is based on the field survey of farmers in rural areas of Guangdong Province, China. A total of 18 natural villages were randomly selected across the province. Within each selected village, 1 to 2 households were chosen using convenience sampling to participate in the survey. In total, 93 valid questionnaires were obtained. Analysis of the survey data identifies key factors that characterize the market-oriented nature of rural private financing behavior. The survey results indicate that 6.45% of rural households hold all surplus funds in cash, whereas the remaining households maintain savings in various types of bank deposit accounts. Owing to limited access to credit from formal financial institutions, approximately 14% of rural households do not participate in private borrowing. So, Table 2-2 presents the main borrowing purposes and the allocation of loan funds across users. Here in this table, 6 main uses are listed, which are common situations among the rural households surveyed. The right column of the table shows the majority value of the proportion of funds for each purpose. Here, the primary factors influencing rural households' choice of financing channels are summarized. Loans obtained from relatives or friends are frequently interest-free and feature flexible terms that can be adjusted through mutual agreement. Compared with formal bank lending, these arrangements typically involve lower eligibility requirements, simplified procedures, limited or no collateral requirements, faster access to funds, and greater flexibility in the treatment of overdue repayment. Survey evidence indicates that less than 40% of farmers' total borrowing is sourced from formal financial institutions, while more than 60% originates from informal financing channels. As a result, many farmers are unable to obtain loans from banks or rural credit cooperatives and primarily interact with the formal financial system as depositors. Here, under prevailing lending policies, funds mobilized through farmers' saving deposits in formal financial institutions are largely allocated to sectors and borrowers with higher expected return, including industrial and commercial activities, rather than to agricultural production or smallholder households. The main factors that farmers consider when borrowing money through private relationships are reflected in the general lending borrowing conditions. The table 2-5 lists the 7 main factors, including credit status, term, interest rate, etc. Use the term financing restrictions theoretically to reflect the gap between the effective demand for borrowed funds and the actual amount received under the conditions of a certain market interest rate. This gap can be thought of as the demand gap. In actuality, if a farmer makes a loan application and receives a response stating that the application was denied, the farmer will be placed in a sample group that is considered to be under financing limitations. This method of identification refers to the methodology utilized in the study of consumer credit problems in the United States. This indicates that the percentage of rural households that have funds from a private loan range from 84% to 96% in rural areas. It is clear that people living in rural areas have a stronger desire for funds from private loans, which is a phenomenon that occurs rather frequently. The proportion of farmers whose requirements for borrowing money are met in full accounts for a minority, about 1/3, while the proportion of farmers whose requirements are not met in full accounts for the majority. This article holds the belief that private lending accounts for the proportion of all remaining funds expressed as the first variable, SHOURU, as a measure of the degree of saturation of the funding supply provided by lenders in private loans. The value of the variable private lending to total remaining funds has an average level of 7.62%. The average proportion of the amount of private loans held by all rural households in relation to the total amount of remaining funds is somewhere between 5 and 9%. This conclusion demonstrates that private loan funds given by lenders account for a very modest part of the total residual money held by rural families, and that the supply of private loan funds is not yet at its maximum capacity. Here we can see the interest rate paid by borrowers and interest rate on lenders' income. In the rural informal lending market, transactions occur between two parties, lenders and borrowers, and involve a single commodity, loanable funds. Through competition and interaction among lenders and borrowers, interest rates continuously adjust to facilitate transactions and move the market towards equilibrium. In theory, the equilibrium interest rate reflects the outcome of competitive interactions among all economic agents. However, the rural informal lending market often deviates from market clearing conditions, rendering Walrasian equilibrium analysis inadequate. In a Walrasian equilibrium framework, markets are assumed to clear, and price-setting behavior by individual traders does not arise. By contrast, the rural informal lending market is characterized by persistent non-clearing outcomes and explicit trader pricing behavior, indicating that it does not conform to the assumptions of a purely Walrasian market. Accordingly, this study adopts a non-Walrasian equilibrium framework to analyze interest rates formation in the rural informal lending market. Within the context of monetary economics, the paper constructs an equilibrium interest rate pricing model for a rural informal lending market with the characteristics of a pure exchange economy, and examines the underlying mechanism through which interest rates are determined under non-clearing market conditions. Here we can see the empirical model of borrowers' interest rate pricing and the empirical model of lender interest rate pricing. So here we can see that x1 in the first equation, x1 is the proportion of remaining funds deposited in formal financial institutions, and x2 is the proportion of total household debt borrowed through private lending. x3 is proportion of loans used for living expenses. x4 is the proportion of loans used for agricultural production and business operations. x5 is household income pattern. In equation 2, we can see that x1 is the proportion of remaining funds deposited in formal financial institutions. x3 is the proportion of loans used for living expenses. x6 is the proportion of total remaining funds invested in securities, and x8 is the proportion of borrowers using loans for living expenses. So these two empirical equations are estimated using field survey data to test the theoretical model proposed in this study. Although necessary technical adjustments were implemented during the empirical analysis, the overall goodness of fit remains limited, suggesting that the model may require further refinement. So, its market characteristics are non-clearing market with financing constraints. To establish an effective trading platform for both the supply and demand side of lending funds and to regulate their market transactions. A systematic assessment of the constraints confronting rural households in informal financial activities, combined with an analysis of the market characteristics of rural private financing, is critical for understanding its economic mechanisms and for informing strategies to harness its commercial potential. Thank you.